Welcome to the Teaching Tax Flow podcast, where the goal is to empower and educate you to legally and ethically minimize taxes paid over your lifetime.
Hey everyone, welcome back to the Teaching Tax Flow podcast, episode 97. The countdown continues to 100. You can do the math. Pretty simple. So today we are going to look at a little bit of a smaller topic, a little bit of a younger topic, but a huge strategy you can take advantage of, and that is how you can income shift to family members or children, likely family members. You can't just go get a kid, start paying them, call them family, whatever. We're going to leave that out of it. But we're going to talk about how businesses can take advantage of this as a huge opportunity when it comes time to owning that relationship with the IRS, aka owning your own tax situation, aka controlling your own tax bill.
Hi, Chris Picciero here, founder of Teaching Tax Flow, co-host of the Teaching Tax Flow podcast, and pickleball enthusiast. Yes, if you listen to the podcast, you know almost every episode we talk about pickleball, the most popular and growing sport in America. We have tons of opportunities for paddles and pickleballs, but we don't have a lot of great gear on the market. Well, I am so excited to announce that Sunsets and Dinks are now a sponsor of the Teaching Tax Flow podcast and produce amazing gear, not only to look at, but you feel confident on the court. Because you are part of the Teaching Tax Flow community, you get a 15% discount on all your orders with them. I know I love the gear I received, and I have quite a good record while wearing it, believe it or not, even at my level. Go to teachingtaxflow.com/pickleball and simply enter TTF15 in the serve up promo code area of your paddle rack.
Let's get into it. Chris Picciero, welcome back to your own show, sir. How are we doing?
I'm doing great. Great to be back with you, of course, Johnny T. How are you?
Doing good, man. I'm actually sitting here on my desk. There is a picture of my little 3.5-year-old. So there's not a whole lot she can do for my business now, except, put landmines, also known as Barbies, dolls, cars, magnetiles all around my feet. So I stand up and injure myself. But eventually, right, she's going to get to an age where she could substantially help me with certain things, right? And that's the key thing, right? Like, you just can't sit here and look at me and I pay you $9,880 a year.
No, it doesn't work that way, at least legitimately. We talk about teaching tax flow, legally and ethically reducing the tax you pay in your lifetime. And one of the things that we have a lot of people in our community ask about, because why? They hear it on TikTok, they hear it on Instagram. Pay your kids, X amount of dollars, which is exactly the standard deduction for doing work. We're going to demystify that. I will tell you, there are several people in our private CPA practice and in the Teaching Tax Flow community that are legitimately paying their kids and reaping a tax benefit. All of my children have done legitimate work for me. Even my little 11-year-old, believe it or not.
And some of them, given the type of business, there's a lot younger individuals can do to help out, right? Stuff that's not, we talk about, I think our friends over at Engineered Tax Services, we hear from them, I think they have a whole conference on it, right? Highest and best use, right? So it's kind of identifying what you're good at, stick to it. If you're out there face-to-face with clients all day, organizing paperwork is not really the highest and best use of your time, right? And that's where these younger chaps and young ladies can step in, right?
You are correct. We're going to dive into it because it's a great strategy. Before we dive into it, in all seriousness, thank you. I feel like I know I've been trying to say it more. When we had those first episodes, man, we were hoping we'd get 5 people to listen because we knew our wives and our parents wouldn't. Well, maybe your dad would. That's about it. He's a great member of the Teaching Tax Flow community. But it is humbling to see the tens and tens of thousands of people that have listened to this podcast because of listeners. Honestly, it's listeners sharing the podcast, listeners liking it, and really giving us the topics to talk about. And they're the gas that goes into our engine to do this. So thank you, first of all. Let's talk about John, what you said, income shifting to a related party. There's several different types of related parties, but we're going to focus on children. So we're going to talk about the benefits of that. Then I'm going to talk about how to do it legally and ethically, how to implement the strategy, and then some practical examples. And as icing on the cake, I'm going to give you a blend. We talk about in teaching tax flow that tax strategies don't live in a bubble. They're blended together. Many work well together. So I'm going to, on top of the income shift to the children, I'm going to put a cherry on top. And we actually have some resources to help you with implementation on both of the strategies we're going to talk about. So let's first talk about the benefits of paying children. John, I'm going to put you on the spot, and we're going to see if you're paying attention to some of our presentations at live events lately.
Oh, boy. Here we go. I didn't go to all the sessions, so if I don't know it.
Well, okay. John, what's the number one key performance indicator, KPI, for tax planning?
Getting it done?
Getting it done. Hey, that's pretty good. Doing it is important.
Actually, doing it. No, that's not my real answer. Actually, I don't know what my real... Oh, my gosh. I don't know. The bad part is
that's all right, John, because you're just the good looks. You're just the good looks in this organization.
The bad thing is I probably am the one that wrote it on your slide. I don't even remember.
Probably.
I don't know, but yeah, I mean,
it is your MTR, marginal tax rate.
Oh,
so ultimately,
I knew that one. I'm gonna kick myself.
I know the biggest benefit of income shifting, of paying a child, is to take a deduction or take income off of a tax return that has a high marginal tax rate and to place that income onto a tax return with a low or zero marginal tax rate. We know one of the 3 laws of teaching tax flow is that tax agencies are your involuntary business partner. You could pick your tax, or the IRS could pick your tax. It depends on if you want to do the proper planning. So the first benefit of paying kids is shifting the income to a lower marginal tax rate within the family. The second benefit for kids is that a lot of times the earnings are tax-free for the children. From a federal income tax perspective, we're going to talk about self-employment tax or Social Security and Medicare in a moment. Why, you might say? Because of the standard deduction. So if a standard deduction's $18,000, just for example, and a child makes $8,950 on his or her W-2, then that would all be tax-free for the child. And in fact, in that case, if the child did not have any type of tax withholding, it would not have to file a tax return. That being said, for single taxpayers for 2024, the standard deduction is $14,600. So what you hear sometimes on the TikToks of the world, hey, pay your kid $14,599 tax-free. Just in that voice, by the way. That's not how it works legally and ethically. But if the child makes that much money or less on a W-2 and has no federal tax withholding, it's not required to file a tax return, and it doesn't owe any tax.
And Chris, something you mentioned
another
advantage. Couple times. I think you probably mentioned about 3 times, which is good. And now I'll say it again too, is legally and ethically, right? So a lot of the stuff that's out there, and again, coming from a marketing guy, it's almost a grab and go in a sense of, grabs your attention and pushes you out somewhere else, to, I don't know, purchase something. There's something in there as a call to action where they're not really following it up with, you can do this legally without really any red flags per se, right? So it's almost in my mind, Chris, like you guys do a great job this with your clients, the presentations, I've seen you do, the ones we do when we're at a lot of these conferences. It's almost like you have 2 things, right? And thinking of tax planning and strategies, you have the playbook, which really in a sense is quote unquote provided by the IRS for strategies. And then you have cheat codes, right? So cheat codes are a half-arse way of doing something that you shouldn't be doing in the first place. And if you get caught, there's penalties, there's repercussions. With the strategies, there's not. And if done right, there's immense positive outcomes, right? So kind of think of that playbook and cheat codes. Cheat codes being the quick, hey, just give them money and deal with it later, where the strategies are obviously legal and ethically them doing valid, legitimate work.
Correct. If we had a fourth law of teaching tax flow, and maybe one day we'll vote it in, it would be that ideas are cheap and implementation's valuable. That's because people will hear I've heard people call us up to, hey, I heard I should pay my children. They don't even have a business. They work somewhere as a W-2 for W-2. They have where would you deduct this? There's nowhere to deduct it. Or, I own a rental property. I'm going to pay my kids. Okay, great. First of all, you're not paying self-employment tax on the rental. Second of all, the person had a loss on the rental that was a passive activity. So now you're adding income to someone and not benefiting yourself in the current year. It's about implementation.
Not to mention their kid's 6 months old. So what's your kid going to do at 6 months old? Which ironically, and we don't have to talk on this at all, but I hear that there was in certain states now, I don't know if it passed or something, I don't think it was on a federal level, about children and partaking as far as for like influencers on social media, right? And their parents or guardians not being able to withhold or kind of take all that income generated from them. It has to be held until they're 18. Did you hear anything about that by chance?
No, I haven't seen that one.
Have to say, it was super interesting, and it makes absolute sense, right? So you're not really like alienating your children, and then they get nothing because you want to go to the casino and burn it every day. But yeah, we'll save that for a later topic. Let's keep track here. We'll keep it short for the little ones.
So the other advantage would be there's a special rule for certain children being exempt from Social Security and Medicare tax. I'm going to talk about that in the implementation part. So that's another advantage. And the parent could take a full deduction for the wages paid to a child as a business expense. So there are a lot of benefits. The other benefit is the child gets that feeling of actually earning money instead of just here you go, here's a couple bucks here. They worked for it, they earned it. So those are the benefits of paying a child. Now let's talk about the implementation part. What needs to be done to make this legal and ethical? First thing is it has to be legitimate employment. So the child must perform like bona fide work for their age and responsibilities. So if you have a 14-year-old, like I have a 14-year-old, she went with me to an event in Fort Walton Beach, Florida this summer and helped me hand out materials to people. She spoke to a lot of people. She actually spoke to adults quite a bit. She had a stack of my business cards. And she just basically helped me with that event. There was no mouse or there's no clicker so she clicked through the slides when I cued her to, and she was really, truly helped me. So that's a bona fide work. Now, is that worth $10,000 for that presentation? No, it's not. But you have to pay a legitimate amount. But typically a 14-year-old could help with mailing and data entry and office filings. Also, and I mentioned this a second ago, the person needs to be paid a reasonable compensation. So for the 14-year-old doing the office filing, mailing, etc., maybe they get paid $10, $12, $15 per hour, depending on where you live, but not $1,000 per hour. That would be just abusive.
And I'm sure that happens all the time too, where
also,
if they catch me, I'll come up with a story.
Well, oh gosh.
Okay.
Exactly. Something reasonable has to be paid. Also, documentation. Whatever you expect from other employees of the company, you should expect from your child, even if, so do they keep timesheets? Do they record payments? Having an actual payroll system to pay these folks instead of slipping them some cash. What did they do as far as tasks performed? Do we have them actually fill out the payroll tax W-9, which you should? Is the business issuing W-2s to the child and filing quarterly tax filings? If you want to be a duck, you got to walk like one and quack like one. So proper documentation is super important. Now, if the child is an employee, they have something called earned income. And the advantage of earned income is they can potentially contribute to a retirement account. That's my cherry on top. I'm gonna put on the end, and potentially get employee benefits. So that's an advantage. And then the payroll taxes and exemptions. This is a huge implementation opportunity and advantage for people that are sole proprietors or partnerships where both parents are partners. So John, let's assume you are taxed as a sole proprietor, and this includes if you're a single member LLC, which is a disregarded entity, or taxed as a partnership where both parents are partners. If you hire a child that's under the age of 18, you still file a W-2 and you still withhold payroll tax or federal tax, although they probably won't have any federal tax to withhold, but they are exempt from FICA taxes, meaning they're not paying in the Social Security and Medicare tax. So as an example, John, if you make $150,000 in your business, you have 2 children, both children make $10,000 legitimately on a W-2. You shifted $20,000 of expense off of your return and onto their return. They're going to pay no federal tax, and they're going to pay no FICA, which is Social Security or Medicare tax. If your tax rate's 25% and you're paying, let's just round it, a 15% FICA tax, your marginal tax rate's 40%. So you paying them that $20,000 reduced your tax by $8,000. I know that's just a quick and dirty example, but that's the power of having minor children that are exempt from the FICA taxes. So, but now keep in mind, S Corps and LLCs taxed as corporations or partnerships where the child's parents are not the only partners. This does not apply. So a lot of times we have clients that are S corporations that do hire children, which is fine. There still could be a really good use case for that, but they're going to pay the Social Security and Medicare tax.
Makes sense. And I think, Chris, the way you described that, if anything, it really outlined like the benefit of it, right? So it's not tax avoidance in a negligent frame. Again, it's a strategy, right? So it's there.
Oh, absolutely. It happens all the time. I mean, if we look at it, I have an example. Just someone in the teaching tax flow community. It's a small landscaping business. They're up in Michigan, so it's seasonal. Most of those landscapers up in Michigan, John, do plow snow in the wintertime, though. Chances are
the grass isn't growing in December. Let's put it that way.
It is not. But the chances that in this example, it was someone that owned a sole proprietor owned the landscaping business. They employed a 16-year-old child. Chances are you're not sending a 16-year-old child out in an F-350 to move snow with a snowplow. A lot of bad can happen there. But in this case, the child worked 20 hours a week in the summertime. They paid him $12 an hour, so they made $2,400 during the summer. I think the child would have liked to make more money, but that's reasonable. So Dad, who will remain nameless, took a $2,400 deduction off of his and his wife's tax return as a business expense. Spanky, who we're going to hide the name, made $2,400, exempt from the FICA tax, received a $2,400 W-2, but does not have to pay any federal tax on that. So Dad and Mom are happy. Spanky's happy. And here's the nice thing. Here's the cherry on top. Other than being Social Security tax exempt. Dad and Mom saying, you know what, Spanky? We love you a lot. You're only 16. We think tax rates are going to go up in the future. You're going to take that $2,400 that you earned, and you're going to contribute it to a Roth IRA. That Roth IRA is going to grow tax-free. And if Spanky puts that $2,400 into the Roth IRA, there's no tax deduction for it. he's in good shape. Now, here's something that gets tripped up, though, Johnny T. Remember, to contribute to a Roth IRA, you need to have what's called earned income. So you can't just contribute to a Roth for a child that doesn't have W-2 wages. You have to have that earned income. So Spanky's got 44 years before he's 60 years old. Let's assume Spanky gets an 8% return on his investment over the next 44 years, okay? That means that money's going to double every 9 years. And that means that money's going to double almost 5 times. So $2,500 doubled 5 times is a lot of money. A lot of money. In fact, it's almost $77,000. So now, what will that buy in 44 years? I really don't know, but that's a significant amount of tax-free, tax-deferred income and tax-free distribution. So that's the power of some of these strategies.
And it's not that hard to implement, we'll say, as long as you know the right way to do it. It's not just, putting cash in an envelope, giving it to your kid, or not giving it to them and say you did, even worse. And then come tax time, you're like, oh yeah, I gave them, 9, 10, 12, 13, 14 grand throughout the year. And yeah, cool. Yep, it was done. It's it. Like you said, it has to be documented. I think one of the things that, Chris, tell me if I'm wrong, right? It does really have to go through a kind of a standardized, if you will, payroll process, right? So like we've talked with the guys at Gusto, which are great with it.
Right. No, and that's what I was going to conclude with. Implementation is important. So first step, you has to go through W-2. Okay? The people at Gusto are really amazing. They were on our podcast. And that's not why they're amazing. They're on our podcast because they are amazing. They're not amazing because they're on our podcast. If you want to implement the strategy, please reach out to us. Okay, because a lot of times Gusto has provided the Teaching Tax Flow community with special discount codes. Right now, I think it's like a 25% off. We just had 2 clients take advantage of that in the last week. Don't go in blind. I will connect you with those folks or John. And then as far as the Roth contributions, work with a financial advisor that you trust. If you need a recommendation, the Teaching Tax Flow team is happy to provide that to you. But implementation is the key, remember. So if you think this might work for you, reach out. Join the fun.
Chris, great topic here. I'm glad we dove into this. I know we've talked about this probably well over a dozen times or referenced this strategy on our podcast. I was kind of mentally going through a list as we were chatting. I can think of at least 6, 7 of them where it's come up. The one that we did on payroll, well, obviously with the guys at Gusto, Will was incredible. Diving into that, they're a really easy, and this is not a paid promotion of them by any stretch of imagination, but very easy to use. The worst thing you want to do is get in, start using a platform that's just outdated and a pain in the rear to begin with. But yeah, we hit some really good points here, right? You cannot 1099 your children and do it that way. You cannot slip them cash. You cannot say, okay, well, I paid you, but I didn't. You have to do it right. Legitimate, actual work that they can do. Again, a 2-year-old is not driving around a snowplow truck. A 6-month-old is not skimming your rental property pool. There's a lot of stuff that's not happening. So take that into consideration. And the final one that I'll leave here, right? And again, I have a 3.5-year-old daughter. These little guys and gals get very expensive. So any opportunity that's out there to save some bucks, do it. Well, legitimately, do it. But on that note, we will see everybody back here as always. Again, leave a review, subscribe here on the Teaching Tax Flow podcast as we itch a little bit closer, a couple more inches, a couple more, we're almost there to episode 1. So same time, roughly, different topic here next week on the show. See everybody soon.
The content provided is for educational purposes only. We encourage you to seek personalized investment advice from your financial professional. For all tax and legal advice, please consult your CPA or attorney. Investment advisory services are offered through Cabin Advisors, a registered investment advisor. Securities are offered through Cabin Securities, a registered broker-dealer. The content of this podcast does not constitute an offer of securities. Offerings can only be made through an offering memorandum, and you should carefully examine the risk factors and other information contained in the memorandum.